Today's highlights: long-term capital continues to accumulate. And with this slight advantage for the bulls, is Bitcoin going to rebound or actually reverse? The Coinbase index is flashing red, and every time it starts to lead the selling, will Bitcoin keep dropping further? The isolated island effect of B will be broken. MiPay has enabled its internal transfer function, so from now on, transfers won't need to be on-chain. Monday, December 29th. This is the BitcoinTV Chinese channel. Be united. I'm Michael. Now let's look at the must-watch 24-hour crypto data headlines. Right now, Bitcoin really isn't in a takeoff mode. It's more like it just took a fall and is sitting on the ground catching its breath. The inertia from the previous wave of decline still hasn't completely dissipated. What the market is doing now is repairing, and repairing again, not sprinting. As for selling pressure, it's indeed being digested slowly now, but everyone's mindset is still on the cautious side. No one dares to be the first to charge ahead. On-chain data is actually very honest. After a round of volatility, short-term players have already pulled out first. On the contrary, it's those long-term holders who hardly ever sell that are quietly increasing their positions. The 30-day moving average has started to climb upward. To put it plainly, impulsive capital is exiting, while patient capital is stepping in. The chips are quietly undergoing a round of rotation, but don't be too quick to call it a bull market. Right now, it's more like the bleeding has stopped, but the strength hasn't been restored yet. If there isn't a clear inflow of funds into ETFs and short-term traders don't become active again, the market is likely to remain in a choppy, grinding phase rather than taking off directly. So the real state of the crypto market right now is that downside risk is decreasing, but there still isn't enough on-chain momentum built up. That means today's small rebound is definitely not a reversal signal. It's just a normal bounce during the recovery phase. To put it simply, now is neither the time for euphoria nor the time for panic. Looking at the current state of Bitcoin in this cycle, it's like a pot of lukewarm water, not hot enough to burn, but not really cold either. As for the funding rate, it's still in the positive range, most likely between 0.003 and 0.008, which means the bulls are still at the table, but they're not pounding the table and shouting to increase their bets like before. You should know that during the last truly frenzied period, the funding rate surged to between 0.1 and 0.17. That was when emotions were really running high. But now, it's more like everyone is still bullish, but they've started to calm down. People are still willing to hold their positions, but they're no longer going all in. As for the bulls, they haven't retreated, but they're not charging forward either. The key point is that during this round of capital adjustment, the funding rate has never turned negative, which shows that we haven't reached a situation where everyone is panicking and rushing to exit at once. But the bears can't exactly celebrate either. In other words, the market right now doesn't feel like the eve of a crash, but more like it's catching its breath and reorganizing. There haven't been any forced liquidations, leverage is under control, but sentiment is cooling off and the pace is slowing down. So as long as we keep an eye on the funding rate and it doesn't suddenly spike to historical highs, this round is just a period of healthy rotation, not a step into a trap. Alright, let's take a look at Ethereum. Compared to February, it's as if someone suddenly hit the cool down button on Ethereum. Trading volume dropped from over 590 billion at the beginning of August to what is it now, 250 billion. You can clearly see the hype has cooled off significantly, so the market has become much quieter. But you have to understand, this doesn't mean that everyone who bought Ethereum has left. It's more like people have just put their hands in their pockets for now, choosing to listen and watch for a bit, waiting to see what happens next. What's interesting is that the money hasn't disappeared. Binance alone handled over $130 billion in trading volume. What does that tell us? The funds are still in the market, but investors are now more cautious and selective. They're no longer rushing in blindly. In the past, people would chase any trend, but now they wait until they truly understand before making a move. So, this isn't a market crash. Rather, everyone is just holding back. The market has shifted from being driven by emotion to a period of rational observation, switching from a noisy mode to a standby mode, waiting for the next big opportunity. When real changes happen, all this capital that's been holding back could suddenly move together and buy in en masse. Alright, please give a like and turn on the notification bell. Today is Monday, and in just 2 more days, the yearly K-line will close. So, in this morning's exclusive weekly review for members, we looked at the yearly, monthly, and weekly K-lines to tell you whether you should clear out your altcoins now or cut them all off. Also, when Ethereum pulls back, which coins should you switch to in order to double your funds more easily? Our weekly review aims to use simple indicators, repeating them over and over to help you develop a feel for the market and establish trading discipline in the crypto space. So we welcome you to join our membership, where we'll keep using these simple indicators repeatedly to help you build your own trading system and establish your trading discipline. Alright, for today's top news, we still need to pay attention to Coinbase's premium index. Why do we keep a close eye on Coinbase's price? Because Coinbase actually represents how American capital is voting with their feet. As you know, most US institutions have their funds either staked or stored on the Coinbase exchange. If Coinbase's price stays below the global average for a long time and shows a negative premium, what does that mean? It means big money is quietly pulling back, reducing their risk exposure. On the surface, the market may still look like it's fluctuating, but in reality, the underlying capital is already quietly retreating. To put it plainly, the Coinbase indicator isn't really a technical indicator, but rather a very clear signal of market sentiment and capital flow. Compared to just watching the ups and downs of candlestick charts, these signals are often more genuine and more worthy of our attention.
According to CryptoQuant data, the Coinbase Bitcoin premium has been negative for 14 consecutive days, with the latest value at negative 0.0825%. This means that US capital is not buying at higher prices but is instead actively selling at lower price ranges. Historically, a positive premium signals institutional capital influx, while a negative premium signals a decline in risk appetite and capital efflux.
But I think it's clear at this point that, Bitcoin is a better form of money than gold. It is provably scarce, just like gold, but it's more portable and divisible, so you can actually use it. I would say it has higher utility, and it was the best performing asset of the last 10 years. And so for storing value, I think it's going to be important for governments to hold this over time.
Bitcoin's recent negative premium stemmed from 4 factors. First, temporary ETF outflows caused concentrated selling. Second, year-end tax settlements triggered proactive stop losses. Third, December options expiration intensified short-term selling. Additionally, while Asian buying exists, it currently can't fully absorb US selling pressure.
So many people get excited as soon as they see a negative premium, thinking it's the bottom, but it's actually not that quick. Historical experience tells us that a negative premium is more like the beginning of a detox period, rather than the turning point for a rebound. So US capital is withdrawing and positions are being dumped. The market needs to clear out all the inventory that needs to be sold before a rebound can take place. So a negative premium isn't a signal for you to rush in immediately. Rather, it's a reminder that this round is about clearing the field. And when will the real opportunity appear? It will show up when the clearing is almost finished. When exactly? In our weekly reviews, we'll remind you on a weekly basis when it's time to make adjustments. Yesterday, during our public live stream, some members asked why the premium for exchanging for US dollars has inverted. There are 2 very important situations that can lead to this kind of inversion. The first is US dollars have become more attractive, and people are more willing to hold fiat assets. Another situation is that the channels for cashing out funds through USDT, or the legal channels, have been restricted. This is closely related to China's crackdown on stablecoins. And in yesterday's live stream, we recommended to everyone the current safe way to convert USDT into fiat currencies, such as US dollars, RMB, Canadian dollars, or Hong Kong dollars. Right now, the only legal channel is MiPay. For example, when converting USDT to RMB, the settlement is handled by China UnionPay, so you absolutely don't have to worry about your account being frozen. Now, MiPay has launched a new feature that allows you to transfer USDT within MiPay without any loss.
This change in MiPay is not just a functional upgrade, but a fundamental shift in its underlying logic. It transforms what used to be on-chain transfers into internal clearing and settlement within the system, bypassing on-chain confirmations and high transaction costs, and establishes a more efficient account and clearing mechanism. In other words, funds are now shifting from on-chain transfers to internal system circulation, fundamentally reshaping both efficiency and user experience.
How do you do it? Open and log into the app, then tap on the payment code. Tap Done in the lower right corner. Enter the amount you want to transfer in the Transfer Amount field, then tap Confirm. How do you get your own payment information? Open and log into the app. Tap on the collection code, and what appears is your payment information.
Everyone, remember this. MiPay is currently the only legal way for you to withdraw funds without having your card frozen. So up until now, MiPay has enabled internal USDT transfers because when everyone tries to transfer funds into MiPay, you'll notice a small note reminding you that due to anti-money laundering regulations, any funds you transfer into MiPay cannot be withdrawn. Of course, once you reach a certain level of spending, MiPay will gradually lift these temporary risk controls for you. Now, after internal transfers, your funds can circulate within the system. Moreover, MiPay has now launched a global prepaid mobile phone top-up feature. As long as you have an international mobile number and a prepaid SIM card, you can top up your phone with just one click through MiPay. There's no need to download various apps just to recharge your phone anymore. Everything can be done in one step. It's a bridge that connects fiat currency and crypto assets. Whether you want to exchange fiat, make purchases, or top up your mobile phone, it serves as your tool. What it earns is just the transaction fee, and you don't need to keep your funds on it. This means less risk for us and less risk for MiPay itself. So, the fact that MiPay doesn't play any flashy tricks in this regard actually makes me feel more reassured. Here, there are legends of overnight riches, as well as carefully crafted scams. This is a dark forest of chaotic development, but it also nurtures a lake of hope leading toward the light. The ultimate destination of faith is freedom. The endpoint of consensus is equality. This TV show will guide you through the fog, help you see the future, and together, we'll gradually become wealthier. After selling CryptoPunk and acquiring the engine platform Yuga Labs, is it possible to recreate an encrypted version of Steam? Google's search volume is only at 26, and the fear index has been stuck at a low for 16 days. Is there still hope for the crypto market? There's a saying, only when the tide goes out do you discover who's been swimming naked. This perfectly describes the current situation with NFDJ. As you can see, Yuga Labs is no longer focused on making noise or making grand promises. Instead, they're shifting their focus back to doing real, solid work. They've started selling off CryptoPunks and cooling things down on other side. It may look like they're exiting, but in reality, they're just stepping back from hyping up stories. This is a shift in gears, a way to re-enter the market at a different pace. After the excitement dies down, only those who remain will be the true OGs of NFTs.
Yuga Labs has acquired Improbable's core technology assets and integrated the team controlling the engine for other side. Yuga is now fully internalizing foundational capabilities. The new system supports high concurrency, multi-realm, modular world building, while also maintaining an open architecture and on-chain asset sovereignty, laying the technical foundation for a long-term, operational virtual world. Compared to aggressive expansion, this step is more like laying the true foundation for a functional digital civilization.
Look, what I would say is that the important thing is not to focus on how we're going to make money. The most critical component is whether you have a unique proposition, whether it resonates with consumers, and whether you can build community connections. You know, Web3 is all about community.
As we've repeatedly mentioned in the daily reports, by 2026, relying on storytelling may no longer be the mainstream narrative in the entire crypto space. So if you look at Yuga Labs' actions this time, it's very straightforward. They've set aside the storytelling and have started laying the groundwork instead. In the past, the metaverse was like making PowerPoint slides and selling concepts, very superficial. But this time, Yuga is building roads, constructing factories, and installing systems, directly moving toward long-term sustainable development. So you can see Yuga's actions this time as, while others are still drawing blueprints and talking about the future and narratives, Yuga is already setting up servers and laying the foundational infrastructure. In the short term, it might not be that explosive, but once the market picks up and the traffic returns, while others are still figuring out how to get started, Yuga will already be able to launch operations right away. So this move isn't about becoming an instant hit, but about being ready to handle and sustain the price when the next real wave of traffic arrives. As you can see, after Christmas and the New Year's holiday, the entire crypto market has been extremely quiet. According to Google data, global searches for the term cryptocurrency have dropped to just 26, and in the US, they've fallen to the lowest point of the year. At the same time, if you look at the Fear and Greed Index, it's been stuck in extreme fear for 16 consecutive days, and on the 26th, it even hit a low of 20. All of this has happened after this round of slow climb, reaching 120,000 and then hitting historically extreme lows. So, there's a person named Luke Groman. Who is he? He is the spiritual banner of the entire bull camp, a macro analyst whose views we've cited in many of our live streams. He has also quietly started to reduce his positions. What kind of signal does this send?
He said that Bitcoin is the last functioning smoke alarm of liquidity. This view has been proven, right? I've also long thought that Bitcoin would act as a neutral reserve asset in a deflationary environment. This view has recently been proven wrong. I think it may still eventually, but for now, that's incorrect.
Groman's recent statements are not about being bearish on Bitcoin itself, but rather a reassessment of the macroeconomic cycle. He pointed out that in the current environment, Bitcoin has not played the role of a stable anchor under deflationary pressure as expected. Instead, it has shown volatility characteristics similar to those of high-risk assets. Against the backdrop of global high leverage yet to be unwound and tight macro liquidity, Bitcoin's risk attributes have been amplified. This has led him to choose to reduce his position temporarily, rather than continue to bet aggressively. This is not a denial of long-term value, but rather a sober assessment of the current stage in the cycle.
So this is a signal. That is, when even those who have always been seen as the flag bearers of the bulls start to hit the brakes. In other words, it's time to shift from offense to defense. It's not that there are no opportunities, but the pace needs to change. So I really recommend you check out today's exclusive weekly report for Gold members. Let's use simple indicators together to build a trading system you can set up yourself, along with the trading principles you need to follow. Now, here's the quick report.
Gold and silver, which were just surging moments ago, suddenly slammed on the brakes. Gold broke through $4,500, while silver went from a sharp rally to a nosedive, like a perfect high dive performance. The money hasn't gone far, but the sentiment has already turned timid. The market is collectively hitting the brakes, but El Salvador is buying again. So far, they've accumulated 7,514 bitcoins, which is roughly $660 million. This year alone, they've added 1,511 bitcoins to their holdings. It's basically a strategy of buying the dip and holding through the rise, showing no intention of getting off the ride. The crypto world is once again buzzing about Binance, as its global registered users have just surpassed the 300 million mark, reaching 302 million. Simply put, whether it's a bull or bear market, people from all over the world are still flocking in. The doors of the exchange are truly open. It's packed to the brim. Yu Xian, founder of Manwu, has issued a reminder that recently there have been cases of prompt injection attacks using files such as agents, MZ, skills, and MD. Attackers can use these to manipulate AI behavior, leading to information leaks or incorrect execution. You need to be extremely cautious when using related tools. Nowadays, crypto scams no longer rely on white papers. They go straight for AI-generated memes, cranking up the emotions, making the visuals bizarre, and sparking explosive topics. Once the algorithm pushes it, people take the bait, and by the time you realize it, your assets have already been taken. To put it bluntly, this isn't a meme. It's a harvesting machine disguised as a joke, striking precisely when emotions are running highest. That's when they strike.
Many people mistakenly believe that being agreeable means being mature. In fact, it's quite the opposite. Those who truly have standards and principles are bound to make some people uncomfortable. But once you start sticking to your principles and setting clear boundaries, you're inevitably going to offend some people. Only those who believe in nothing, stand for nothing, and just seek to keep the peace on the surface can appear harmless and never offend anyone. But this kind of gentleness is often a form of compromise that comes from inner emptiness, whereas truly mature people have clarity in their hearts. They are clear about right and wrong, what should be compromised, what must be held firm, what is worth resonating with, and what must be rejected. And precisely because of this, these mature people are bound to have those who disagree with them. They will inevitably be disliked, misunderstood, and attacked. What does this show? This precisely shows that they stand firmly in a clear position, while only those without standards seek everyone's approval. Those who stick to their principles are bound to have opposition, because taking a stand inherently means making a choice. So those truly worthy of respect have never been the ones liked by everyone, but rather those who refuse to back down even in the face of opposition. You must understand, people without enemies often have no real convictions either. If you understood, feel free to give us a like. That wraps up all the content for today's program. Here, we've organized some very important membership benefits. We hope you'll consider joining as a member so that together, during this round of market decline, we can gradually build our positions, work hard together, and slowly become wealthier. See you tomorrow.